If you're an expert in Switzerland looking for a mortgage and you are wondering why there is mortgages for 100 years, why no Swiss people are paying back their mortgage, then this video is for you. I'm going to explain to you why Swiss don't pay back their mortgage, why there is no amortization to zero, and after this you will know more than Swiss people do. So let's go. I'm a former banker myself. We are mortgage brokers helping people buy their property and coordinating everything with the mortgage. So check it out, let's go. To understand the Swiss mentality, there are like three components. Like you have the mortgage amount. Let's say you have a mortgage of 2 million francs. You have the interest rate, which is very, very important in this situation, meaning 10 years for 1.6% or a sawed-on margin. And then you have the amortization, the amount you have to pay back every year. Now, in Switzerland, your mortgage is technically divided in two parts. It's not really divided. You can divide it. That's a whole other video. But technically, it's divided in a first and a second mortgage. The first mortgage is like 65% of your property's value, meaning if you have a property asking price 1 million francs, 650,000 francs mortgage is your first mortgage. Then you have a second mortgage. Your second mortgage is everything above these 65%. Usually you make a down payment of 20%, meaning you have a mortgage of 80%. So your first mortgage is 65%, your second mortgage is 15%. Now in Switzerland, you have to pay back not your whole mortgage, this 80%, only the second mortgage, 15%. Now you have to pay it back within 15 years. I will tell you how you can do it, or till you get in pension, till you are 65 years old. Whatever happens first. So if you're 60 years old, you have to pay back your second mortgage within 5 years. If you are 40 years old, you have to pay it back within 15 years. Now let's move on. Now your amortization, you can do it directly or indirectly. Directly means your mortgage amount goes lower every time you pay it back. Let's say you have an amortization of 10,000 per year. So you pay back 10,000 and your mortgage goes lower and lower. So goes your interest rate. Most Swiss, they do their amortization indirectly. They pay it in a 3A, in a third pillar. What they pay in a third pillar, they can deduct from their taxable income. So they save taxes and they make their amortization for the bank. So it's like two flies with one clap, or however you say it in English. And now, what happens is your mortgage stays the same. It always stays the same height. And your 3A goes up, up, up. Now the cool thing is your 3A, your third pillar, you can invest it in ETFs. So you have your amortization, you have tax savings, and you have the chance to get more money over 10, 20 years. Now there is a reason why they do it like this, and I'm going to tell you afterwards. Now, what happens is if you want to buy a property, the bank makes a calculation with 5% to stress test you if you are able to still hold your mortgage if the interest rates go up. So what the bank makes is they make a calculation of your mortgage with 5% instead of the current rates. They include the amortization and the utility cost of 1% of the asking price. So this whole amount has to be lower than a third of your income. And now if you're an expat with a variable bonus, you have to be careful because not every bank counts your bonus as 100%. Maybe you also get a bonus in stocks. We see that with people in trading for the oil industry or in finance or in pharma. So every bank is different. You have to watch out. You want a bank who calculates with everything. And now the question, why don't Swiss pay back their mortgage? It's because of tax reasons. In Switzerland, you can deduct your interest payments from your taxable income. And so most people have a high mortgage and they invest the money they don't need in stocks or whatever. You also are able to deduct from your taxes the renovations you do. But carefully, there is a law that is going to be changed in 2028. because then you are not able to deduct these kind of stuffs anymore if you're living in the property by yourself. It's called in German Eigenmietwert. I will do a video for this topic, and that's why you have to be very careful, and that's why most people are like 70, 80 years old and they still have a mortgage. So in Switzerland, I think Switzerland is one of the countries which has a lot of debt for houses, real estate debt. And if someone dies, the property goes over to the people who inherit it, and also the mortgage. So people inherit also the mortgage. And what it means for you is you have to be very careful, because there is a law changing for the Eigenmietwert. In a few years, you will not be able to deduct the interest payments from your taxable income. You will not be able to deduct the utility costs or renovations from your property and from your taxable income. And if this is something new for you, if you are looking to buy a property in Zug, Basel, Zurich, or Schwyz, and you would like to have someone who explains it in plain English, a former banker, because you just want to make no mistakes. You just want to have a very good rate, and you just want to live in your property and not pay any more rent. Then we are able maybe to help you depending on your situation. Just click on the link, fill out the forms, and one of our team members will contact you, get in touch with you to see what your situation is and how we can help you. With us, you can just lay back and we will take care of everything. You don't need to worry for anything. So click now on the link and contact us for a free consultation.